Hi and welcome to another video from TCM Education. This one is really one for the books and depicts how important risk management is for day traders. Nothing stands out other than this perfect move yesterday. That's how it looked yesterday. The stock up, if I remember it quite right, 18% at the close, nice pickup in volume, a gap up and go, closing at the highs of the day. And that was the day before yesterday. And yesterday, which was Wednesday, basically a total collapse and close at the lows of the day. And we basically are exactly where we were at the open. We closed Wednesday at the open of Tuesday. During this process, if you don't manage right and you stay unresponsive, obviously a swing play here is a disaster. But a day trading can be very, very effective. So let's take a look at yesterday's price action. I'm going to link yesterday's video in the description below. Amazing. And shows that you cannot trust anything. I mean, sometimes we have a stock that's up 100% NKTR, up Tuesday 100%, 150%, ran another 50% yesterday. This one obviously did not made 100% of profits, but 18% is a huge number. Increased volume is important. Closing at the highs is important. Bottom line. Now how can you depict it, manage it, go around it? Were there news behind this move? Maybe there were. I will try to figure out if there were some news here behind this move. I mean Wednesday. Overall, I have to say this is very disappointing. Okay, especially for those who love the continuation plays. And this is like a mega move that turns totally around in one day. I don't see any, maybe profit taking, maybe one of the big time investors bailed out, maybe who cares what the reason is. The bottom line, as a day trader, you want the continuation, you don't get the continuation, but you still can trade it. Okay, so like I said, the link of Tuesday video is going to be in the description. Let's move to the 3-minute charts. And this is the price action, guys, Tuesday. So you can see the huge gap up, the break over 40. I was actually talking about this stock early in the morning recap on Tuesday. Why? Because that 40 stuck into my head as an important number, and the breakout was amazing. Anyway, that's the amazing close at 43.40, highs of the day. That was, guys, just a little bit more than 24 hours ago. Okay, so now we're moving into yesterday's price action, which is a Wednesday. Okay, so out of that 43.40 close, we end up with a big gap down to 42. Then the stock trades as low as 40.50. Pulls back and then starts moving lower and ends up almost at the lows of the day, which were pretty much the lows of Tuesday. Now, let me add the VWAP and then we can discuss it. So that's the VWAP. Again, when the price action is too fast and furious, the VWAP cannot keep up. Maybe this is a good thing, because if anybody bet on the short side of this trade, Obviously the result could have been and was amazing. The question is where. Again, if you live under the impression of a Tuesday trading day, you need to really move away and think day trader 100% and trade what is in front of your face, meaning the chart, versus trading the strength of the stock 24 hours prior, which is not very easy because we discussed it so much. Okay, so where is the potential entry point here in the morning session? Let's take a look at this. Let's call it movement, a radical movement up, down, sideways a bit, and then the stock breaks the lows of the day. So again, if you want to trade a breakdown, meaning lows of the day, it's in retrospect it works. The lows of the day were at that point 40.50. Oh wow, okay, a round number again. So 40.50 was the break up on Tuesday. 40.50 is the breakdown. Let me bring in 40.50, and now the question is again, is this a tradable? Because again, in retrospect, you can see that it nearly broke cleanly to the downside, but that's not a guarantee. But what do you do if this stock reverses higher? Where is your stop loss? And I have to say that the only reasonable stop loss here will be, I mean, the entry is at 40.50, $1, maybe more. So we're not talking about a 1% stop loss. We're talking about anywhere between 2, maybe 3% of risk here. That means that this trade is not really a trade that we want to take. Okay, so the technical pattern is broken in terms of the risk. Obviously, we don't know nothing about the reward, but as day traders, we want to take care of the risk. In this case, the risk is not manageable. So 40.50, obviously, the move was almost clean. It spiked up a couple of cents and then dropped. Now, if you insist of taking this trade and you use a random 1%, then it's working. Okay, so that can be an option, but this is not the way we want to trade. We want to trade when the chart is clearly depicting the entry point. It does. The stop loss, it doesn't. So when we're having a question mark here with regard to the stop loss, and this is a huge question mark, I have to say that this is a no-go. So okay, so again, that's my opinion. Everybody's entitled to his own opinion. You're trading your own money. You can do whatever you want. A 50-cent stop loss would have been enough to continue with this trade lower. Now let's take a look. Where is a potential entry in this trade chart? Because after 12 noon, it's clear that the stock is either moving sideways, and the trend is clearly lower. So the stock is moving sideways, and if you're looking for an entry point, there is an entry point. Let's take a look, guys, at this consolidation between. Let's see the numbers here in a second. Highs 39.90. Let's call it 40. Lows 39.70. Okay, now we're talking. So now we have, in this case, less than 1% of risk. High is 39. I said 90, so it's going to be a little bit higher. Sorry about the charting package, but that's 39.90, and on the bottom we have 39.70. that's something, this channel, if you observe it, guys, I'm going to draw it with a green parallel lines. And again, it's easy to see in retrospect. I'm not sure that it is so easy to see live, but at least you have criteria here. 20 cents, let's say 30 cents of risk. 30 cents of risk fits the strategy. The stock drops from 39.70 to 38. That's a $1.7 move on a 30-cent risk. That's 1 to 6. It reverses and it's still $1 at the close. So if you go with close at 4 p.m. strategy, the stock closes at 38.60. The entry was 39.70. That's $1 versus the 30-cent risk. Perfect. So this works. Okay, this here exit at the close works. Now there are other potential entries. If you look carefully at this chart here, under 39.50, then the stop loss is going to be a bit steeper, 39.80. So again, the same scenario. Instead of 20-25 cents, now it's a full 30 cents, and those are the trades. I mean, immediately after you can chase it, but I won't advise that. What's amazing that the stock closed at the highs yesterday, the day before yesterday, which was Tuesday, and nearly closed at the lows a day after, erasing basically all the profits. But since we are day traders, and again, if you are a swing trader, wild stuff can happen. In this case, your profits are gone. If you are a day trader, your profits are pocketed at the end of the trading day, and you start fresh on Wednesday. You still have the memory of the strength of the stock, but the chart is telling otherwise. So you need to move away from this concept that a stock is very, very strong one day, and it should be 100% of the time very, very strong the other day. These occurrences happen very often, but when it doesn't happen, you need to prepare. And if you are a swing trader, you cannot prepare. But if you are a day trader, you don't take advantage of the move higher. You start working again, and your entries are obviously not optimal. Maybe you cannot even enter the trade. And it goes on the other side. When the stock sells off, the swing trader is losing all its position and may turn negative. You as a day trader already pocketed the money of the prior day profits, and now you start fresh and may pocket another trade. May pocket, and nothing is guaranteed, of course. So that's a Dr. Jekyll and Mr. Hyde type of a stock. It's going to be on our watch list today as well. I mean, it was amongst the 13 stocks on the daily power list yesterday and the day before yesterday, and probably will stay on this list or near this list. Anyway, SMR is clearly a stock that is at the forefront of investors. Just take a look, guys, that the shareholders here, before we close this video, I have a couple of seconds. Very big shareholders and important: Vanguard, BlackRock, Samsung, Morgan Stanley. So those guys are Citadel, Bank of America. Those guys are in this stock for the long haul. They're not here to make 20% or even a 50% move. Thanks a lot for being here, and please share this video with your friends. We'll see you, of course, in our next video.